Good afternoon and welcome to NYFP. In midday and midweek trade, the major U.S. stock averages are in the red. The Dow Jones Industrial Average is hanging to that 15,000 level, while the other indexes are all down by at least 1%. Joining me this afternoon is Mark Otto of Net Capital Americas. Mark, good afternoon. Thanks for joining me.
Thanks for having me back, Remy.
We are seeing the stock averages at session lows today. We got mixed economic data releases, but all eyes will remain on the U.S. jobs report at the end of this week. So the question regarding the Fed continues today following a mixed bag of Fed speeches. But what do you make of this red action we're seeing on the board today?
It was really interesting coming into the day. I think jobs reports or focus is on macroeconomic data that's related to it has really been magnified simply because people are trying to speculate what's going to go on with the Fed going forward with the QE policy. So today was our first bit of that type of data. The ADP report was not, unimpressive. We hit at 135,000 versus the forecast of 165,000. I think added to the downward effect is there were revisions for April. So the revisions were 113,000 down from 119,000. So it sort of tells you the fact that not necessarily bad news is good news as far as QE and the Fed are concerned. It could be the fact that bad news with jobs-related reports is indicating that QE3 is not working. So that's the other side of the coin as well. Going forward, tomorrow we're going to have the initial jobless claims numbers. 345,000 is anticipated, and that's down from 354,000. Going into Friday, the non-farm payrolls, that's a big one of the week. So 168,000 is what they're forecasting, and that's up from 165,000. And the unemployment rate is supposed to remain the same at 7.5%, as you know. So I think that all this macro data, this is the first sort of tell sign as how it's being received. It'll be interesting how going forward towards the end of the week and into the weekend, people are sort of thinking about how they're going to maintain their risk up at these levels.
And Mark, we'll continue to wait for those jobs numbers, but we still have another session to go before we get those figures. And we did get some mixed economic data releases from around the globe this week. We had PMI manufacturing as well as services figures, and overnight we saw growth figures from the Eurozone as well as weak retail sales. So what do you make of the latest global macro data?
Well, it certainly it tells you that things are sort of moving at an uneven pace, and it is fragmented. The fact of the matter is that this rally globally, particularly with the U.S. and the EU, has been sort of the fuel in the system, has been the central banks saying that they will be accommodative, they will supply easy money going forward in liquidity. So I think that tomorrow's meeting, as far as the ECB is concerned, is going to be a tell sign on how that's going to be handled going forward. However, as people were sort of cautiously optimistic for the last couple of months and we're watching all these markets rise, I think that there's a bit more speculation in the air right now.
And I'm glad that you brought up the BOE and ECB will get their rate decisions tomorrow, as well as the ECB president's comments after the rate decision is announced. But it does appear as though, as you mentioned, fuel for global equity markets have been central banks. But we also need to keep in mind that currency fluctuations are also being monitored. We saw the dollar-yen break below 100 again, and we did get some disappointing reaction to Abe's plan, and I wanted to get your take on the BOJ. What do you expect from them going forward, and will they be able to help calm markets?
Well, I think that you touched on a couple of points that are very relevant when it comes to Japan. They got the green light to put through their stimulus of 1.4 trillion over the next 2 years. So many people thought that a lot of the thoughts were that the yen was going to continue to climb. I was hearing reports that many traders were using it as sort of a hedging tool. So they were putting their risk on equities and hedging it with the yen. The Abenomics is really something that people are not looking and embracing right now in Japan, it seems. So the third arrow was actually announced. So it seems as though that last night's reaction in the Tokyo markets being down almost 4%. Wasn't a good tell sign going forward. It seems as though a lot of these acts are more out of desperation, and there's a lot of speculation on if Japan's plan is actually going to work.
Okay, Mark, well, we have a lot to look forward to for the rest of this week, so thank you so much for weighing on the macro figures as well as your expectations for central bank.
Thank you.